Good afternoon, everyone. Welcome to the afternoon review. Let's start with crude oil. The WTI futures fell to around $62 on Tuesday before finding support and rebounding. The market remains stuck in its recent range, likely between $62 and $66. Aside from the sudden Middle East tensions, which could spark volatility, there are few drivers strong enough to break oil out of this range. The US, Russia, and OPEC members are all boosting production, reinforcing the market equilibrium. And the Brent crude shows a similar pattern as well. The $70 level near its 200-day moving average is a major ceiling, while $65 provide firm support. Over the recent weeks, Brent has fluctuated between 65 and 69 with no signs of a breakout. Even the missile exchange between Israel and Iran only caused a temporary spike before the prices returned to balance. And for now, the range traders continue to buy the dips in Brent and light crude. And turning to US dollar, all eyes are on this week's non-farm payrolls report. The forecast calls for 50,000 new jobs, which is stronger than last month's 22,000, but weaker than the 100,000 plus gains earlier this year. With labor supply also softening, the unemployment is expected to hold steady at 4.3%. Any surprise could quickly shift expectations, and a potential government shutdown could delay the release, though historically, shutdowns have only minor impacts. And overall, we expect the report to reinforce signs of a cooling labor market, supporting 76 basis point cuts by early next year. And finally, to gold. Despite the overnight volatility, the metal continues to hold about 3,800. The latest report shows jobs opening rising slightly to 7.23 million in August, in line with the forecast. Hiring and separation show little change. With labor data stabilizing, the Fed is unlikely to accelerate easing unless we see clearer weakness. For gold, further upside towards 4,000 may require softer labor numbers. This could also be the last major report for a while, as Congress failed to pass a funding bill, raising shutdown risk. So that's all for today's review. Thanks for tuning in, and we'll continue to monitor the developments closely.